So let's look at opportunity and how we would trade this opportunity. Okay. Expect there's going to be a move to 165.30, 166. We expect that this market is inside of this kind of triangular formation. We know this is a wave 3 and that this is a wave 2, and the market should no longer fall below level 1, 161. Okay. It looks like we're gonna have to buy 163, right? And that 163 is gonna take us to 165.50 or 166. So 163 to 165.50 is 250 points. Okay, the risk is if we're gonna have a hedge at that level, level 1 is going to be 200 points. If we raise this to 161.50 is 150 points. 161.50 is just at level 1. Right? We'd have a hedge and not a stop. Right? We'd have a hedge because we're quite confident that the move will materialize. We can then, of course, relate this to specific risk, meaning if I was to buy 2 minutes or 2.5 minutes, let's say I'm buying 2.5 minutes, the risk is just 3%, $300. The reward is now going to 165.50. It is 2 minutes by $250, $500. More important, the most important factors to consider is how fast, how soon will it take me to get there, 65.5. I have a fundamental on Wednesday that is supposed to be bullish sterling, so I should be able to close that position on Wednesday, seriously, all right? And also the next other important factor that I must take into consideration is how I'm going to manipulate the position or manipulate the levels around the position. How do I really control my risk? So I simply control my risk that if I fall below a level 1, I should be seeing a degree 3 trend. I will open a hedge. I will be seeing some kind of I can move this high, then fall back. Maybe just move to 165, then fall back very suddenly. All right. So I will have something like $300 negative PL. We're holding $300 negative PL. If the market falls below that neckline, once I get positive momentum one more time, I take profit on that negative momentum. I will not have any other position on my account at that point, at that time when I'm doing that position. I close and take profit on that negative momentum. If the market has reversed, the market will bounce below the neckline at the neckline, move higher again, and I'm doing money again on my original position. If I'm not going to be moving higher and doing money on my original position, I'm seeing a degree 3 negative momentum. So I'm mistaken, I'm seeing a head and a shoulder. I sell into that position, make money back to that neckline, redo the position several times. Now you get the point. There's always money to be made in the market so long as you're on the right side of the trend. This is a reversal trade, not really a trending trade, but we are able to manipulate the position by being very close to a level 1. There is a bounce at that level. I can take this a bit lower than level 1, then I will probably not risk having my hedge opened, but I would be on less size, smaller size. I would have to take it down all the way to 161, for instance. I would be on smaller size, right? If it makes me more comfortable, then okay, I'm fine. I will not consider to buy level 1 itself because I don't want to miss the opportunity. Level 1 comes in here at 161.87, even maybe lower. Not very likely to be seen. You're saying that it's just doing shoulder levels. We should be moving higher on the positive momentum that we're seeing on the 1 hour and the contained momentum that we're seeing on the 4 hour. All right, so I have, in order to make sure that I would be profitable, I have to restrict all my trading to just one position or two positions at a time. one of these two positions must be already in profit and running smoothly. I have to define very strongly the time element. How long do I expect to hold that position, and how much do I expect to earn at the end of that time element. And I also have to define the levels, the risk that I will be handling, and how I will be handling it. I will not accept to take, like everybody else, not accept to take a loss. So I have to understand I'm going to have a hedge below that neckline. I must know how to handle that position, right? In order to be able to get out of it a in a graceful manner or in a profitable manner. Right, let's move on. We have all been looking at the sterling yen all through past week. We have been looking at the sterling yen as it was going down